The unfortunate part is because most of the work I did was in financial crimes, the money was already gone. You're the right entrepreneur. You've got the right idea, but you are not the right manager. You've got the idea, but you need someone who understands the book, someone who's going to be able to bring you in a little bit. You have to really get over the flash or the pizzazz or the dazzle of the pitch. You are in a position that can help someone, and you're compelled by the touching story, and you lose a little bit of sight because of that story.
Welcome to the Diligent Observer from PitchFact. I'm your host, Andrew, and every week I share insights and strategies to help angel investors make better bets. My guest today is John Samore III, a certified public accountant and certified fraud examiner with over 25 years of experience. His experience is in forensic accounting, fraud investigation, and litigation. John holds an accounting degree and an MBA from USC. John's worked with Big Four firms and various companies across a variety of industries, and so he offers a really unique perspective that is comprehensive on financial, managerial, and operational due diligence for M&A transactions, including both qualitative and quantitative analysis. His expertise includes performing internal audit activities, testing controls, SOX compliance, and recommending a variety of policies and procedures. John has collaborated with government entities, nonprofits, public and private companies in sectors such as banking, finance, healthcare, media and entertainment, retail, real estate, manufacturing, agriculture, and more. So, John, thank you so much for being with us today. I'm very much looking forward to our conversation.
Thank you for having me, Andrew. I'm looking forward to it as well.
So, John, one of the things that stuck out to me as I was reviewing your background is that a couple of former jobs you held had the title special agent. What does that mean?
That means I was given an opportunity to, as a law enforcement officer on the federal government side, investigate a variety of frauds. And I think one of the things that you find from the background of being just a general CPA and an accountant and blending that with the special agent is that you see your fair share of scams, schemes, and frauds that are perpetrated on innocent victims. And oftentimes you could take that same approach on a proactive basis as we are here, where an angel investor might want to protect themselves from being a victim of an unscrupulous entrepreneur.
So what you're saying is you have seen some stuff.
I've seen some stuff. I have worked a variety of healthcare frauds. I have worked a variety of investment frauds, both as a special agent and as a private professional. Bankruptcies, Ponzi schemes, pyramid schemes, money laundering, a lot of nefarious activities that involve identity theft, and run-of-the-mill stuff that you read in the media and in the newspaper that really end up hitting close to home once you put your hands in it. And once you start investigating, you start seeing certain patterns of activities that you can then take approach from the reactive side you're doing and apply those proactively in almost any type of work in accounting.
I'm very excited to speak with you and to hear your perspective because so much of the work that we do every day is focused on helping angels assess the opportunities in front of them. These early stage investments that are often being made tend to be made without a whole lot of information, right? It's a couple guys working on an app in a closet somewhere. Like these are very, very small operations, and these investors don't tend to have a lot of capacity to run really thorough diligence processes. So I'm super excited to have you with us today and to hear your perspective on the early stage investing process. Before we get into that, I'm curious if you have any stories or examples that really strike you from your experience in those special agent roles. Maybe something that was particularly memorable or shocking to you.
Nothing really shocked me once the case comes into view. You read about it before you become an agent, and then once you start investigating it, it it almost becomes you're a part of not the fraud, but you're part of hopefully the solution. One of the things that happens with government agencies, the initial excitement when you get the case is when you get your search warrants and your arrest warrants and you don't, but what you don't realize is all the back end afterwards, all the reporting and all the digging into the information in order to build that case for prosecution, working with the attorneys, understanding the laws, understanding the rules and regulation, constitutional rights. And again, from a criminal side of what we worked, that was all you had to prove that beyond a reasonable doubt. There was no, hey, here's the preponderance of evidence like you would in a civil matter. But most of the time, if you worked the case properly and you had done your homework and got the evidence, very, in my particular case, very rarely would it go to trial. Most of the times, it was just enough there that the individual would plead guilty. The unfortunate part is because most of the work I did was in financial crimes, the money was already gone. There was very
Mm,
little, if anything, to get back to those who lost. And oftentimes, those who lost were the taxpayers. Was the
mm,
healthcare fraud, a Medicare fraud, and other times it would be a regular investor who got sucked in into a very compelling investment that turned out to be a Ponzi scheme. They took advantage of something that was trusted to you,
mm,
and that was the hardest part. You found out a lot of those were like what they call the affinity frauds, people preying on their own people. There was some commonality. Hey, trust me, we have the same background. Okay,
uh,
you're not going to rip me off, but more and more and more you find those to be the
really? So
case.
you're saying one of the more common situations of financial fraud was someone basically defrauding people that trusted them in a pretty significant way.
Religious entities,
Yeah.
people in your own country club, for example. Hey, this is a buddy of mine. You can trust them. We're all peer. We're all friends. Okay, put the money in here. And unbeknownst to everybody else, and none the wiser. And again, I'll be honest, before I became a special agent, and I was always a skeptical individual. And fortunately, my investments in the past,
Mm,
I had been a victim, right? I had friends that I had trusted that introduced me to put money into things, not big money, because I wasn't, I didn't, I was still a hesitant type of investor, but those went south,
mm.
and I was not happy. And so as my career started building, I wanted to start researching that guy because I now had the expertise to go back out and see what I could do. But unfortunately, statute of
Uh,
limitations preclude me from going back that far. But as a younger person who's now older, I want to share that so the younger, the middle, and the older don't become victims. Let me be the victim for them.
yeah, well, I think anyone listening to this would certainly appreciate that perspective. I wonder if you could give a specific example just to cement what this looked like. Maybe one of the cases that stuck out to you in as much detail as you're comfortable sharing.
I think one that really stuck out was it was a healthcare fraud case that I was working, and it came very, very quickly. It came across my desk, and what happened was is there are a lot of what we call medical device frauds that are out there. And one of the cases that came across my desk was it was a shop that opened up and they sold certain medical devices through Medicare, and they had stolen thousands of Medicare ID numbers. And what they were doing was they were hitting the system as fast as you can believe. So the little shop opened up. They're hitting this. They're billing Medicare for it's only maybe a 2,000 square foot store. They're hitting Medicare for about 50 to 75,000 bucks a month. Very good revenue for a little 2,000 square foot store with basically no inventory. And the money was being electronically deposited in their account, and they were hitting that ATM and taking it out right away. It wasn't sitting there very long. And so when the tip came out, we were scrambling to get the warrants to seize the bank account. At the same time, we're on the phone with the banking investigators, trying to do everything we can to hold this so we can prevent at least some of the money not being taken from the taxpayers.
Right.
We were able to pull a little bit of it, but that case ended up taking 2 to 3 years. And what was the selling point for me is we didn't know the real identity of this person. And so I was going through all the debit card transactions, and I was up and down one of our major boulevards in the valley, and we didn't know who it was. So I was stopping at all of these locations where this individual was using that debit card. I stopped at a flower shop and I said, "Hey, can you help me out with this transaction? I just need to know where it goes." I know this guy. He always comes in and buys flowers for his wife. Gave me the real name of the individual. Says he always goes by this name, which was all completely a fake name that was involved in this. And that's how we ended up tracking the individual down, was just going to, by happenstance, just knocking on business doors where that credit card or that debit card was being used. And we were able to
Wow.
find out the true identity. Because when he established his shop to be able to bill Medicare, it was all a fraudulent scheme.
Wow.
But we found it just by knocking on a couple of doors. And sometimes the work does not happen behind the desk. You got to get out there and see for yourself.
Well, I think a lot to take away from that story on our topic today, which is specifically quality of earnings as a kind of an element or component of this fraud research. What is quality of earnings? That's something that I think a lot of investors have heard about, heard talked about. Quite frequently, it's not something that I understand super well. So maybe you could just define for us what is quality of earnings, and maybe specifically at the early stages that like angels would be involved in.
I think, in the simplest terms, the quality of earnings is really primarily how accurate are the financials and what's being presented to you, the angel investor, by the entrepreneur. Is the entrepreneur giving you the full picture of what those earnings are? And so, for example, if an entrepreneur says, "Hey, I have $100 million in sales," well, that's great. But what's the quality of that $100 million in sales? Is it made up of one customer? Are those customers related party transactions? How much of those sales are collectible? And so there's a lot of that traditional accounting that goes into play when you talk about GAAP. How was it booked? Is it recurring revenue? What type of revenue is it? Is it subscription based? Is it one time? Is it collectible? So there's a lot of things that go into when someone gives you a financial statement. What's the quality of that financial statement? That's great. I have all those sales, but if they're uncollectible, well, there's no value to them. So am I reserving against it? How long have they been sitting on the books? Are they promises? Is there something to that revenue that I need to do in order to earn that revenue? Is it 100% earned yet? What is my liability in order for me to convert that potential revenue into an actual recognized revenue? So when you look at, and that's just one example of the financials, the same thing goes with assets. What are some of the assets you have? Yeah. And I think one of the things that, from an angel perspective, is who else has equity in the business, depending on what that investment is. Is that entrepreneur giving you the full picture? Because if they have already sold 80% of the equity, but they're not telling you that in the financials and it's somewhere hidden, well, you make that investment with the idea that, hey, I'm going to have 100% of this business, but you don't want to be lost when someone else tries to stake claim into the success of that business. And so that's how I would define quality of earnings. A little bit longer winded than expected, but those are a couple examples to give for the audience something to think about when it comes to it goes a little bit deeper than just say, "Hey, look, your financials look pretty. Your balance sheet is well organized. Your financial statement's well organized." But what's the quality of those numbers?
So, John, a lot of the companies that angels look at might not even have revenue. If they do, it's wonderful, right? Just looking at a company that has revenue is fantastic. Why is quality of earnings important since these entrepreneurs and these businesses are so young?
And that's one of the misnomers is the term quality of earnings. It's the quality of the overall financials. So in your example, they may have no earnings at this time, but they have a viable, tangible product. So then what you want to look at is what are they spending the limited dollars that they do have? What's their marketing effort? What is their investment into the manufacturing, the design, the intellectual property, whatever the particular product or service is? So it's not just the numbers on the financial or the revenue on the financials right now. It's what's management's philosophy on spending. What does the owner live a high lifestyle? Is he indebted? Does is he constantly borrowing at a high rate of interest? Who's on the hook for that?
So you're saying that quality of earnings applies to any company that is a functioning company, because any company that's a functioning company has expenses. Even if they have no revenue, they have a cap table, they have an equity split, they have spend, and evaluating quality of all of those things is important and informs a tremendous amount about who this person is, how they're running their company, and what the future might hold. Is that a fair summary?
Absolutely fair and 100% accurate. Because if you just focus on one slice of that pie, if you just focus on revenue and you just focus on cash, or you just focus on liabilities, and you keep those in their separate silos and don't see how they flow together, you're going to miss the mark. And there's going to be something that's going to come back, not necessarily fraudulent. It could just be bad management. It could just be that, hey, you're the right entrepreneur. You've got the right idea, but you are not the right manager. You've got the idea, but you need someone who understands the book, someone who's going to be able to bring you in a little bit. And you can watch a lot of the shows on TV and a lot of the stuff, and you'll always get a little piece of information from them on how they kind of think. But then you look at all the disclaimers at the end, and they say they make the deal, and then you know, it's like dependent on this review, and again, they're going through their financial due diligence. They're doing their quality of earnings. They're not signing on the dotted line on that 15-minute pitch. It just that's not smart business. But they know they have, like an angel, have an idea from their history of what businesses are good fits for them, personalities of the manager. And so they're taking all of that together to decide whether or not they want to take that next step. And that next step becomes the quality of earnings and the financial due diligence. You don't really do that at the beginning stage at the pitch. It's only when you're getting ready to make a move
So
and you figure
you're
out.
saying once someone is interested and is seriously considering an investment in something, is the right time to start thinking more intentionally about quality of earnings, because the high level revenue numbers might be adequate to get you interested, but before following through with a commitment, you're saying that it's fundamentally important for an angel to understand what's
Absolutely.
underneath that top line number and
Absolutely.
what's underneath that. John, I'm curious where you typically see individual investors miss the mark here. Like, what are the more common mistakes? Where do people slip up?
I think they rely too much on the the focus of the pitch, the energy of the pitch, the energy of the entrepreneur that takes them away. It says, "Oh, it's a great idea. I don't want to miss out on this." The the words from the entrepreneur that says, hey, look, I'm talking to 10 different people. Are you really talking to 10 people, or do you want me to make that investment right away? You have to really get over the flash or the pizzazz or the dazzle of the pitch. But again, sometimes the angel investor, it's not their full-time job. It's it's like a hobby, so to speak, right? This is something they're doing for the community. They want to make money, obviously, but they also have a generous mindset to it. And that sometimes hurts even more is because it makes it harder to say no because you are in a position that can help someone who is struggling or has an idea of a new product or a new spin on an old product. And you're compelled by the touching story and you lose a little bit of sight because of that story. And sometimes it takes someone from the outside to just kind of say, it's a good story, but let's talk about it a little bit further. Let's not then pull on our heartstrings to make that investment. We have a little bit of time and we can ask some more questions because someone has brought that entrepreneur into the door. Someone they trust has allowed them to come in to pitch to the group. So the trust is already there amongst that peer of angel investors. We're all sympathetic individuals.
Yeah.
Some of us are a little more skeptical than others. Some get paid to be skeptical. Some of us get paid to protect the less skeptical. And that's why we're here.
I want to flip the question around though, from an entrepreneur's perspective. They are by default the most optimistic and should be the one selling their company. Where do you see entrepreneurs miss the mark when it comes to the underlying assessment and organization and the quality elements that we're talking about today? Because I think a lot of what you're talking about, the pizzazz, that I think there's a lot of really well-meaning entrepreneurs that
Absolutely.
just miss the mark for one reason or another. I'm curious where you see the biggest mistake on the entrepreneur side.
Where I see the entrepreneur not necessarily fail, more what they lack is that business acumen. The numbers elude them. And that is something that can be taught. I mean, obviously, you would know as an entrepreneur where you're in trouble real early on if you're spending more than you're bringing in and you're not where your design and your planning and your execution to completeness or release of the product or service is ready to go. But I think a fundamental accounting course is something that would be beneficial to every entrepreneur that feels that they're getting a product or a service ready for a pitch and they want money because they can very easily build a set of initial financial statements. Just using some software. It's not complicated. Once they learn a couple little things that are just presentable enough to get into the door. Now, again, once it goes further, then they might start getting some document requests and the data room gets a little bit bigger on the quality of earnings and the financial due diligence. And they're saying, hey, I need you to break down, your customer base. I want you to break down, any potential liabilities or litigation areas. I want you to break out the competition that you have in certain regions of the country. And those types of things are not necessarily accountant per se, but they're very numerically technical when it comes to once you understand financials and be able to break out dollars and regions and all sorts of, you can break out any information strategically to present because every angel is going to have a certain set of questions that are going to need to be answered to satisfy them. You may have an angel who customer centric, focus on customers. Why are you going to get to the customers? Other ones might be, a marketing guru. Well, we don't think that marketing plan is proper. Well, what's your marketing plans up front? The entrepreneur is the face of that business,
Sure.
and they have to be able to talk sales, financials, accounting, marketing, development, distribution. All of that has to come under them because they don't have the money or the funds to have an individual vice president or a team to handle each one of those tasks and facets of the business.
Yeah, I wish that every entrepreneur was mandated to go through a basic accounting course. But
Basically, yeah,
unfortunately,
that's all it is.
that's not the reality today. That is not required
No,
to start a
balance your own
company.
checkbook. Even that would have been a simple test to give you an idea.
So I love something you said. You said angels really should just ask a few more questions. And I love that. Angels often don't have that much time because of something else you said, which is that it's often part-time, it's a hobby, they want to get back. What are the 3 to 5 questions that an angel should always ask, regardless of the industry or stage? What are the 3 to 5 questions that are fundamentally important for an angel to ask and have a good understanding of before they commit to a deal?
One, are there any other investors? Do you have any other equity obligations out there? The second is, what are you going to use the money for? Highlight, and it has to be specific. That's it. And go out there and market. You really have to narrow down, how are you going to market? How are you going to develop? You've spent so much so far. Did you learn anything from what your past spend was to maybe find some better ways to spend that money?
Any others that you would say angels fundamentally need to ask regarding quality of
I
earnings?
think I, I think those are all going to come naturally based on who the group is, what their focus is, what the product is. But the more they have, the more pieces of the puzzle they can put together, and that's going to help them along the way. But those are the two major questions. Every other question is going to come out based on the product, the service, the industry, and what the angel investor's particular experiences are.
Super helpful. At what point does it make sense for an early stage investor with limited time and perhaps even limited budget to engage someone with more expertise in this space, like you or another? Like, when do I bring my accountant in to look at a deal? When do I go pay my lawyer to take a closer look at different agreements? Like, help me think through how an angel would make that decision.
I would say that becomes at their risk tolerance tipping point. So, for example, if a pitch is $100,000 and you have 100 potential investors, it's $1,000 each. The math is good. Well, $1,000 for each of these is might be tolerable. Well, it says, why are we going to spend any money on a third party professional when this is just kind of, this might just not hit me in the pocketbook that hard separately. Take that same $100,000, there's only two. Now that's $50,000 that might push the envelope a little bit more and says, you know what? If I lose this might hurt. This might hurt a little bit more because I'm taking on a lot more risk and putting a lot more dollars in. Maybe we do take a chance and we go out and say, look, I just want some comfort. I have the idea of, and again, the angels can tell you, the professional, where they're a little uncertain, where they want a little more comfort. The angel might say, hey, I just want to look at the customer base. I just need someone to go full blown area, do a little more than just kicking the tires. You don't want to necessarily do it yourself, but you don't have to pay big money for this. You don't have to go to a big four and have a blended rate of, $600 an hour where you have a staff person all the way up to the partner having to get on a Zoom call to give you an update. Is, hey, I went out there to the flower shop to kick the tires for you. You only need one guy who can do the grunt work and the partner level work, and it's for a relatively small fee that gives you a little more comfort. So that risk reward is the number one decision when you're bringing a professional in. What is your risk tolerance? Are you willing to lose it, or would you rather take one step further on one particular area
Hmm.
that you just want a little more comfort in, and then make the decision? But it
Super
doesn't have to
helpful.
be all or nothing.
Yeah, that's super helpful. And I think to your point, the pre-work that the individual does to focus in on, hey, here's the 3 things that I feel weird about. Hey, accountant or lawyer or other professional, can you double click these areas and let me know what you think? I think that's really, really helpful, and it provides some focus and more confidence in the decision, whether it's a yes or a no. So I love that. Well, John, this has been super, super helpful. I would love to hear 2 things. One, share a little bit more about what you're doing currently, because I know you've got a lot of different projects in the works. Hopefully none as terrifying as some of the ones you talked about earlier, but maybe you do. So I'd love to hear a little bit more about what you're doing currently. And then second question would be, how can our audience stay connected to you?
Absolutely. What I'm currently working on right now is a combination of things that my background just affords me the opportunities to do. I'm working on a working capital dispute of about $8 million between a buyer and a seller. I'm representing a seller and trying to get them some more money back based on bad accounting that was presented to them by the buyer. So this is a large public company. So I'm working on that one. I was engaged recently by another public company. One of their divisions has an issue with expense report fraud. So going through a whole spectrum of questionable activities based on travel, dates, what's business, what's personal, and trying to come up with a solution. A lot of these types of cases like that, there's different aspects to it. Do they want to make a point to other employees? Do they want to prosecute? Do they just want to terminate? Do they just want to get the money back? So you have to be able to understand the client's needs along with with the attorneys as well. From an angel investor standpoint, I took my background and all my bigger projects that I've done, quality of earnings and financial due diligence with hedge funds and private equity, and I just started branching out into this arena. So I'm taking all those aspects and putting it into a practice and a focus that I can partner with the angel investors across the country, because a lot of this stuff can be done remotely, but a lot of it has to get outside of that office.
Yep, the flower
And the
shop.
best way to
I'll never forget it.
the flower shop. Don't forget the flower shop. I'm not huge social media, but I am accessible on LinkedIn. So it's just John Samore the third. My father's also a CPA as well, so so I do put the third in there. A little bit different
You
specialty.
got your own identity theft
Yeah,
situation.
that's exactly it. But one of the things is we can always transfer like season tickets to each other because
Yeah, there you go.
from generation to generation to generation. AAA, I think I'm a 200-year member of AAA.
It's incredible. I'll never forget the flower shop. So thanks for that story. And I look forward to speaking again real soon.
Absolutely. Thank you, Andrew.